just wiring, I'd like to pose the first question, which is, we heard for the last 2 days that there are tremendous risks in our industry. We're all talking about the explosion of the traffic, huge capital expenditure, from an investment perspective, new competitor coming in, MVNOs driving the value down, obviously. In certain markets, we've seen that in Holland, for instance, once you had 30 MVNO around, the value of the market was discounted by 20% some years ago, and then it was stabilized again. So there are tremendous risks in our business. Some investors are saying, let's move out from the telecom business at all. Others are still believing into it and continue to invest, particularly in emerging markets. So what is the fundamental motivation for you as investors, or as analysts, or as investment bank, to believe into this business still, and why you're actually sitting here together? So who would like to start? Please, you start first, please.
Okay.
Your name eventually for the audience.
Yeah, okay. My name is Okan. I'm from Telecom. I'm from the business development M&A team of Telecom. Well, Karim, thanks. I think it's a question of, for the investors, what to do with cash, utilizing the cash. There are different ways of utilizing the cash, either through, to your shareholders, through dividends, or share buybacks, which actually, by the way, could be a very efficient way of using your capital, or acquisitions. As you said, I mean, the markets are not the same as it was before, and currently, actually before, like 10 years ago, I mean, an operator who's having problems in its own domestic business with increased competition and so on, would have the choice to go like offshore, like 5,000-10,000 miles away, to find a growth opportunity on a standalone basis, which will provide you 10-20 times CAGR for the next 5 years. And in that way, the telecom operators will be able to sustain their margins and sustain their revenue growth and so on. But it's no longer the case. First, there is limited number of options in the emerging markets. And given the lack of the supply, the entry to the the existing opportunities is quite tough. I mean, it will you will end up paying quite high multiples to enter such markets, and it's no longer lower penetrated and so on. And plus, the other issue is financing. It's no longer there, especially nowadays. And we also feel that especially the non-recourse leverage buyout is almost zero. There's nothing. So all of these developments, I believe, impacted the M&A initiatives and the drivers for each company. An operator who is having difficulties in the in its own domestic business, now looking at its own facilities, what can we do in our own market, to be able to provide more organic growth in ourselves. And I think it's quite connected with the M&A for the inorganic growth side. I mean, in that sense, the initiatives, the drivers of the M&A change, the in-market consolidation is quite important. That would provide you an increased competitive edge in terms of extending your products and the service portfolio. Also enhancing your market share, in your own market, increase your scale. Also convergence type of M&A drivers, because it's not only from the operator perspective, but it's also from a consumer perspective. The consumers are more educated now. I mean, 10 years ago, an 8 years old kid playing with a PlayStation, now is an 18 years old, adult, who wants to play or who wants to do the same type of things in his iPad or iPhone, and be mobile. So the consumers are also more sophisticated versus 10 years ago. So you have to be able to provide more quality, not only quality products and services, but also more sophisticated services. So convergence became one of the very key elements of the M&A driver. And we have seen it for the last 5 years, actually.
So basically, I take two key messages, and one of the messages is quite funny, which is actually the cash issue. You know, the company in the world that has the biggest problem with cash?
Say again?
You know the company in the world that has the biggest problem in cash right now? Apple, with 300 billion cap, as you know, market cap. They don't know what to do with that. And the question is, what convergence, what area they can expand. They cannot acquire and operate. It's going to be even too small for the business they're generating. So it's a real issue. So I understand that, not the same extent, but telcos were cash flow production machines. They need to do something with the cash. And one way is to further expand. Another way is also to consider the extension of the portfolio with conversion services. Let us come back to that later on. I'd like to also understand your view in extending from the existing core business, going to verticals. But let's talk to that about later on. We see telcos selling gas, electricity, et cetera, Is that one of the expansion roads you may think of later on? Let us take another view. I think I can,
Just to add Okan's views, actually, I totally agree what he's saying. Because, and if you think of our market and our industry about like 5 or 10 years ago, especially in the old days, when a country opens up a tender for a third license, second, third, fourth, you would have seen flocking of those companies going in and bidding. These days, probably any country, even a developing country in Africa, opens up a fourth license tender, you wouldn't find a single bidder, even in the third licenses. I mean, people, because there's no profit left. And if you have $1, would you invest in a green field where you will get your money back in 7 or 8 years later? You wouldn't invest. And so people are reluctant. Why are we still investing? Actually, it is the same what you have said. Google, Apple had money. What are they going to do? They only know this business, so they are going to probably invest and then in a tablet or another Apple 5 or Apple 6. Turkcell, we have cash. We only know this business. Probably we will again invest in the business again, and probably we will not go for a gas or energy or a banking industry. We will just find an industry where we know a bit, or we will just go telecom related or technology related investments, and because that's what we know.
And I understand that the market is becoming difficult. So what are the expansion routes? What has changed? Let's say 1 or 2 years ago, you were making still deals in the emerging markets. Now we see the majority of the players, not only you, are much more reluctant. So what has changed from your perspective? I'll come back to you afterward. Just to elaborate a bit on that as well.
The consumers are paying less and less. I mean, just think of about 5 years ago, or all our monthly phone bills, monthly mobile phone bills have diminished probably twice or 4 times or 5 times less we are paying. So EBITDA levels have decreased. So you wouldn't want to go into a field where you will be making 25 or 30% of EBITDA, and you want to have higher margins. The margins are diminished. That's why our industry is becoming a less attractive industry, and probably that's the reason now the consolidations are happening. Like in Nigeria, there are how many? 6 operators now?
4.
4
mobile operators.
There used to be 6, for example, probably. In Turkey, for example, we used to have 4 operators. The 3 and 4 merged together and became 3. Even in the third operator and the second operator are still losing money in Turkey. Imagine a country of 70, 80 million population. So the margins are diminishing, and the industry is becoming less attractive. But we are still going to invest in the field of technology and telecommunication, because that's the field we know.
Christian, your perspective.
Thanks, Karim. It's an interesting perspective coming from the operator perspective. And I would just like to step back here a little bit, because if you think about investor, it doesn't need to be only the operator which invests. It can be also the private equity fund which invests, or it can be the institutional investor which invests into publicly listed entities. So you can come from various angles. And In Nigeria, we've seen a wonderful example where you set up this scene where you probably find all kind of these three investors being present, and one operator in particular from this country, Etisalat, is very successful in Nigeria. And all these investor groups have different return profiles. So I don't think there's one right or wrong answer when you feel the time is right to invest in telecoms. I'll just give you an example. At the current markets, as we all know, the equity markets are under certain pressures at the moment. You can argue why, but certainly one issue sits in Europe, one issue sits in the US. The regional markets have actually, despite being down, have shown relative outperformance of about 10-12%, which is actually, for an institutional investor, currently not a bad place to hide from what's going on in Europe and the US. There's an issue around the magnitude in terms of you obviously can't hide all your money from these markets and shelter them here in these markets, but in theory, that's what's happening right now. And in particular, the telecom industry is a good place to be currently because of its defensive characteristics and its strong cash flow characteristics. And this is actually what takes the industry always back to the forefront of what do we do with the cash, as you pointed out, Karim. And I would say there's one common misunderstanding, which you find quite frequently within the management teams, if I may say so. If you have a cash balance and you're a listed entity, there's nothing wrong about in one or the other year to return more cash via dividend. It's actually often a disconnect, which I hear as a research sell-side analyst, between perception of management teams and their shareholders, because the management teams feels increasingly under pressure to do something with cash. Whereas like the investor says, well, there's nothing wrong if there is no good investment opportunity, I'd rather have it coming my way and have a good dividend yield, which actually from a return perspective, coming back to my first statement, the return perspective is all what matters. The publicly or the institutional investor investing into publicly listed telco companies does consider that part of its return. Whereas like a telco and in the early days of investment probably wouldn't consider that right away as part of the return equation. And for the private equity fund, it's all more geared towards the end of the 3 to 5 year investment period, where, for example, an IPO, initial public offering, could be an exit opportunity.
Certain markets in Europe, and I'm coming from one of those, where it is not attractive anymore for private equity to acquire a business. We have 4 operators in Austria. You may have heard that Orange is withdrawing from 3 markets in Europe, from Portugal, from Switzerland, is on sale, and Austria number 3 times number 3. So from a strategic operator, staying number 3 is not profitable anymore. They're withdrawing, which is a very strong signal, by the way. And they are investing their money in other markets, in emerging markets, particularly in Africa right now. So they're trading basically. But what's most interesting right now is that no private equity are interested, because they're saying the time for a transformation of telco is over. In that particular market where it's overcrowded, we are in a consolidation mode. So the only way to exit is actually to consolidate with another player. What is your perspective on that coming from emerging markets? Do you see private equity, as they cannot make any deals in certain mature markets, coming, so to say, to the emerging market? Is that their future, if at all they find a business there? Or is it over for the telecom? That's my kind of where I'd like to go through. You mentioned a very important point, Christian, here when it comes to private equity and a strategic investor. And it's interesting to experience that for the first time in the mobile history.
Well, the future of the telecom industry is in Africa, and maybe some parts of Asia. Now, it's been said here by many presenters that the future of the telecom industry is in the broadband, providing broadband facilities and access. The mobile market might be maturing right now, but there are still opportunities in the mobile market. For instance, in Nigeria, which has achieved success, we have just 65% penetration, and the target is to get to 80% penetration by 2015. There are countries that have, for instance, the presentation by Norway, they have, I think, 98 or 99% penetration. So for Nigeria, we still have a lot of room for growth. The same is applicable to some African countries, or most African countries. Now, the other sector is the broadband business. It's a fact that it's capital intensive, but like I said, in Nigeria, we're willing to subsidize that business to make sure that the burden of capital investment is taken off the telecom operator or the private investor or the private equity investor. So we're willing to facilitate that part of the telecom industry to make sure that it grows. Like I said, we just have 1% penetration, broadband penetration in Nigeria. So we have a population of 150 million people. So there's room for growth. So and of course, room for return on investment.
So you see the growth potential also even bigger in a broadband rather than in a classical voice business where
Correct.
the penetration. And any private equity moves in Africa or in Nigeria so far? Or is it still coming from the classical traditional investors plus eventually the local players in the oil industry or utility industry are also cross-investing in the telecoms? Where do you expect it coming from in the future?
We expect it to come from the private sector in Nigeria and overseas. But you see, it's capital intensive. It's not something that can be taken over by the private sector in Nigeria alone. It has to be done with international investment.
One way of, and this is I think one of the points in the agenda as well, talking about the efficiency and the cost reduction, etc. There is a mega trend going on right now with network sharing deals. And to me, this is one of the biggest cost drivers in terms of savings. However, in every market, as we have assessed, there is only one best par that fits together. And if this par makes the deal, the third one typically can never catch up the competitive advantage. You may recall that Vodafone was number 1 in the market, now they're number 3. The deal between Orange and T-Mobile made it that way. Same thing in Poland, Orange and T-Mobile, the two, they have roughly 30% market share each with a 4 small operator, but now Polkomtel, the ex-Vodafone, is number 2 in the market, number 3 in the market, as the two others putting the network together and having 100 million cost saving per year. How do you see that in terms of investment opportunity, in terms also of an opportunity selling off the infrastructure passively to private equity, to the TowerCo or infrastructure guys, the GLT, the American Towers, etc., and take the cash and invest it in more active component or service area. So there's another new game entering right now, which we are quite active in. I'd like to see your perspective from an operator and also from an investor.
I can start from the operator view. If you're a number 1 in the market, like Turkey in Turkcell case, and we would oppose the view to somewhat, but if you are the number 3 operator in any market, they would immediately, go for the idea. But I think there has to be somewhere in between. It is not fully sharing everything, but probably mast sharing, site sharing is an added value for all operators, as well as it's an added value for the consumer. But if you push it to the heart, to the all levels, then you are basically not taking into account the original investment that has already been done by the number 1 operator or number 2 operator, while it is a huge advantage for the number 3 operator. So the regulator has to think of this way. All operator has to have a breath area. They have to live in the country. So the consumer has to have an advantage, but the operator should not lose their investment, upfront investment, with any kind of regulative changes. So to speak up the results from the number 1 operator view, I think it is somewhere in between. The mast sharing, site sharing, and probably it will stop there.
Of
not
course,
a national roaming and plus.
When I mean sharing, you have multiple options, obviously, and obviously in Spain, as you know, Orange and Vodafone has partnered for the rural area. keeping competition in the urban area. You have in other markets a merger of the two peers, the strongest guys coming together. That's the Poland and also the UK with the two. It's a merger of equal, I would say. Then you have also an option where the third one just cannot continue to sustain the investment, and what he does, he keeps a very limited number of base stations and actually merge into a bigger entity, and he becomes actually buying capacity on the long term, which is for the number one operator, for instance Turkcell, if I just think it could be quite important and attractive strategic option to say, now I have this small disruptor making my life tough. Now I make him dependent on me, and I agree on the long term for the next 20 years how much a gigabyte will cost you, so at least I have a certain control in the market. So from the regulator perspective, if a big guy and a big brother does this, for instance, the regulation should be much more careful, not on the small one, but actually on the incumbent, right? So there are multiple ways of handling that.
It's an interesting angle which Akram brings into that discussion about tower sharing, and I do see the element on the regulatory side and the concerns for the number one player versus like a number 3 or 4 player. I would like to add another dimension to this, which is the environment. And from an environmental point of view, I think we all agree that there are certain countries where you just have a tower congestion or a radio congestion in the marketplace because you see too many towers. And I've been actually impressed by the region here, how strict they have been about putting up towers. Just to give one example, in Qatar, ICT Qatar had a period of about 11, 12 months where they didn't give away any building site for towers because they wanted the two operators to sort things out and come up with a joint plan. And this has happened now, and now the further build-out and rollout of the networks is happening. And I personally think this is a very progressive way forward and a good example, not only from a pure financial point of view, but also the regulator got involved. There will be different views out there. Is that a fair agreement or not? But the regulator clearly triggered that process. From an investment perspective, it makes sense because it reduces the investment dollar needed to bring up these networks. And then, let's face it, I mean, how many highways where you drive your cars on have you seen run in parallel? I haven't seen any in the world, unless I'm missing a country here where that's possible. So it is a very awkward structure which we have in telecoms, which I personally think is legacy of the industry, because initially the key differentiating factor for operators was network quality. I would challenge that view clearly today. I think the differentiating factor today is services and service proposition to the customer, of which obviously the network is an important element, but it's no longer the consumer, the element which the consumer decides its decision of purchase on. So that mind change has really filtered through all the operators. It has come a long way across the operator community. And certainly the examples you gave from the European world has shown that this no longer is in the mindsets of the operators, and I think rightly so. It's a big step forward.
Oh, I think the neighboring country here is you have 4 operators, and the 2 of them are making eventually, this has been announced already, one of the biggest towerco deal ever. We're talking about multiple billions here. Where they're giving away their exclusive ownership of the tower business with an injection of one of the global towerco player, keeping just 25% ownership or whatever that ownership will be, 20, 50, whatever. But the point is that you're giving up certain assets to one of the international players. Please.
It is usually hardly in any conference that, we always talk about value for the consumer, value for the user, but it is hardly that we talk about value for the owners and investors. 2 days ago in Italy, the LTE tender was finalized, and the poor operators, I would say, had to pay 4 billion euros just for the paper. It's a frequency. And imagine how many years it will take for the return of 4 billion, plus they will start making profit. So then I think it is time, and we have to be, frank among ourselves. how are we going to create value for investors and owners? Otherwise, nobody will invest in Italy or in Turkey or in Kuwait or Bahrain, wherever. So nobody talks about what is the premium the consumer has to pay for those LTE access, or what is the premium they have to pay to be mobile. In Turkey, for example, Turkey, by far, among all countries, around 200 plus countries in the world, the coverage, geographic coverage, has if you take the list of geographic coverage percentage, Turkey becomes number one. That's interesting because there's a huge pressure from the government, from the politicians, to have a coverage. So we are building towers and base stations or base stations even into the remote villages where nobody is even talking or roaming. So I think it is time for all of us to think of what is the return. And if there is no return, probably in a few years from now, there won't be any return. So the investors and owners will take from their money and start going somewhere else.
Akram, thank you for mentioning Italy, because all operators indeed invest $1 billion, except our client, which is Hutchison. The bet, though, that we made in this bid is actually to say that the future is driven by capacity, not by coverage. So the spectrum that we want to have is actually the 1800. And the billions in Germany and Italy and other markets, US, are put in the coverage area, which is the 800 megahertz spectrum. So this is a fundamental philosophy and strategic bet in the future, what will drive this industry. So obviously, we believe that it's a capacity business. Therefore, the spectrum that is really valuable is the 1800. And that is, interestingly enough, for the shareholder, the most accessible one. And we have two examples now. We have the German bid with, as you know, 5 billions, right? With E+ going for the 800 only, 1800, 1.8 gig. And we have Hutchison as a number 3 player in Italy. We'll see the future. Talking about the shareholder value, I'm quite surprised actually to see a lot of shareholders not pushing even further the shared, I would say, services and synergies. Why do you, in operating in multiple countries, for instance, do you still have a full structure of the telco? Why there is no one so far who has dared to use eventually the brand, to use a very strong distribution channel and a brand, as MVNOs are doing, but actually having the network centralized, the majority of the support functions centralized. So when you do an extension in a new country, win a new license, why not just from the beginning set up the management expectation of the local management just to be a distribution channel and not anything else? Is this, in your view, possible, thinkable, because you need much less in terms of structure, cost, etc.? Or the pain was not big enough for the investor, you're still happy with your returns, that this will eventually come in the future? How do you see this? I'm looking at you.
Yeah, well, from our perspective, I think the Synergies makes a lot of important tool when we make our decisions, when we look at markets, or when we, make a decision if we move or not. And for the OJE Group, we have operations in Turkey, South Africa, Saudi, Jordan, and Lebanon. And we have a Synergy Council, for instance, for the OJE Telecom Group. And this Synergy Council gets together every month somewhere. They share the ideas. For example, in which market, in one market, a product is being provided to the customers, and if it's a success story, and if the other colleague in another market likes the idea, so they share. Sometimes the colleagues are being also, spend time in each country. So that's the way that we, we approach the Synergies, and we also in the procurement, we form these councils during our procurement agreements.
No, I think I'm fully aware of these synergies and this council that you have, but typically you're replicating resource and optimizing them. That is, you still have in every operation an own procurement department. You still have in every operation and network operation, basically division, etc., one NOC, etc., in every country. And of course, you meet and try to optimize the procurement for the network expansion, for the device, etc. I'm talking about something much more radical. Eventually, it's just utopia. Eventually, it's not possible because the market requirements are so different, and you still need to have replicate the same structure in every market. I'm talking about something where you would really get rid of all the structure, or in expanding in something new. I know it's difficult to restructure, but in expanding your market, what you would not just put the competence on the sales and marketing and have eventually 10 guys in the procurement, not 150 like every operator has today.
It's an interesting vision, Karim, if I may jump in, because you're basically talking about the telco operator version 2.0.
Exactly.
I think what it really requires is an ideal world where you have greenfield operations you set up and you do one country after the other. The reality of telecoms investment is, and correct me if I'm wrong, but opportunities arise here and there, and they don't come in the order you like them, and so you have to sometimes be quite opportunistic. And they might not only be a greenfield operator, so you get legacy business with it. But if I may throw in one example, which I think is a very good example, and what Vittorio Colau is currently doing at the helm of Vodafone, if you look at their European operations, this is probably the closest you can come to a European network. It touches on a lot of elements. You touch on the synergies, which are not only on the cost side, as we know, they're also on the revenue side. So if you think, for example, roaming tariffs within Europe on Vodafone network, that is a competitive advantage, which then comes under scrutiny of EU regulation again, because it doesn't have, you have to be careful it doesn't become an uncompetitive element of it. But you then have cost elements. We heard from Okan, the procurement side, there's a European procurement center. So it doesn't go down to the ultimate kind of 2.0 version of the telco operator model, but I think it is one example of a company which has, number one, the assets under its umbrella, certainly in various, or at least in the European region, where they can try to come as close as possible to the model. And you also have to take the time out to do so, because if you're in an expansion mode phase, you keep adding these assets, it's very hard to go through that process, and you can get easily caught out. So currently there's been quite little telco M&A going on in the world, which actually I must say to the benefit of the management teams, because here in this part of the world, we've seen Etisalat walking away from the Zain Group deal. We've seen Telco Kingdom Holding walking away from the Zain KSA deal. There has been an increasing discipline around doing M&A, which I personally, from a reflecting investor interest, very much welcome, because people have stuck to their guns. They have certain investment criteria, and I'm sure your organizations have them all, and taking regulator perspective into view, they've stuck to their guns, and if it didn't stack up, there was no deal.
Thank you very much for your input. I'd like to take a question from the audience. I'd like to soon come to an end. If there are no questions, I'd like you to make a prospective statements on how you see the value creation for the assets owners and investor as a message to the audience eventually before we close down.
Just to add to your last
yes,
question and your remarks, this Telco 2.0, whatever that is, nobody knows what Telco 2.0 is, but if you're a technical person, you describe in terms of a technical infrastructure. If you're a sales and marketing guy, you describe from a sales and marketing view. But I think just to put on, as a mark, as Turkcell, we are trying this Telco 2.0, whatever you are saying, or MVNO 2.0 actually. And we said, this is our assets, brand, sales and marketing. So let's, replicate this model in any country. We have started in Germany. Our colleague presented our MVNO approach in Germany. Probably we will expand in other countries, in other European countries. And it is, we are also not far away that we can also extend into these countries, because we don't want to go and pay billions of dollars for just a paper, third license or a fourth license, and wait for 5, 6, 7 years to return your money back. If you are an MVNO and sales and marketing organization, in 1 year you can get your money back and start a positive EBITDA, and analysts love it, they like it. So probably we will see this kind of trend more and more, you know, and you wouldn't be surprised if you have start seeing MVNOs or sales and marketing organizations without any network investment in Arab countries, in African countries as well.
Very good point. Thank you. Okay, please.
You were just making a point about the investment criteria. Actually, I think it's a very good point, because I think it also changed, you know, versus 5 to 10 years ago. Also true for us, and also from an investor point of view. I think Ekrem will join me on this. If you're a listed company, I'm just talking on behalf of our subsidiary, Telecom. It's also important to be able to communicate the opportunity to your investors. It's not just, you know, going and just buying something, but it has to be a strategic acquisition, you know, after post-benchmarking, the option versus dividends or the share buybacks and so on, because the strategic acquisitions would mean that should provide you some synergies, some cost savings, some potential revenue synergy opportunities and so on. For instance, in Turkey, what we have done, because 5 years ago when we acquired the company, it was just a pure fixed play. And in the last 5 years, we have created a true integrated player. First, we bought a controlling stake from Telecom Italia. We bought 2 IT companies. We bought an educational software company, a games company, a call center, and international carrier wholesale, which is Invitel, you know. So in this picture, you know, Turk Telecom versus 5 years ago is a true integrated player that can compete much more efficiently in its own market, but also in the regional markets as well. Because the subsidiaries now can go and just sell their products and services in the regional markets. So in that sense, I think from an M&A perspective, creating a shareholder value has changed, because the M&A drivers has changed, and it's more focusing on strategic acquisitions other than just straightforward growth-driven acquisitions.
Obviously, what I take from both of you is actually you're talking about strengthening the portfolio you have first in your portfolio. That's the biggest value, instead of going out and buying paper and start from scratch. And what you're saying as well, Ekrem, is to say, let us expand what we know best and manage the initial investment and the risk we have from the beginning, which is actually both capitalizing on the assets you have.
Another dilemma. I mean, we have one dilemma is related to the, you know, I'm looking at Christian, but is analysts or investment bankers. I also consider, talk about investment bankers' dilemma. They have 2 hats. One hat is to the consumer. They are collecting money from, you know, common people and trying to invest their money. And they're also trying to invest or, you know, our money. And they want to be a sell-side or buy-side advisor. On one hand, they come to us and saying that, buy this. On the other hand, when we, you know, then they talk to the, you know, community at large, they are saying that, you know, take the money and give it as a dividend. So as Okan was saying, you know, we are a publicly open company, so we have to tell and convince our investors what we are doing exactly. So we, you know, it is not it is no longer a hidden scenario that you go in and just, you know, put your money in any country and you don't have to tell, you know, or tell people what you are doing. So we have to convince our investors, as well as our regulators, our politicians, everybody, you know, everybody has to be convinced that the investment that you are doing is strategic and it has to have a good return, as Okan is saying.
Okay.
Well, I'll speak for Nigeria. In Nigeria, there are very good opportunities for private capital and private equity, especially in the broadband market. And we want to partner with investors and telecom companies by the provision of subsidy to make sure that the return on investment is fast. Within 3 years, an investor should be able to get his capital back with the government subsidy. In a situation where government is willing to subsidize up to 50% of equity investment in the broadband industry. So we're here to invite private capital and telecom companies to look at that opportunity. There are challenges, of course, but these are challenges that we're looking forward to overcome very soon. Just like any other developing country, there are challenges, but there are great opportunities also. Thank you.
Thank you, okay. So you have the last word, and eventually Christian, reflecting back on what Dr. said, the squeeze, the double squeeze, I would call it. What's your perspective, and where are we expecting the next wave of type of deals? Not where, but what kind of deals you expect?
A couple of points to make. I mean, number one, there's a wonderful invitation out from Nigeria to look at Nigerian telco investments, which I think everyone should be encouraged to do so. I think you will all agree that we had a rather quiet period of telco investments over the last probably 12 to 18 months. Probably not going to stay like this, because one of the wonders of equity sell-offs is always that there are opportunities opening up. So it's the classic half full, glass half full, half empty situation. I tend to look at the glass half full, so I think there are actually wonderful opportunities opening up, especially in times of tough markets. And it depends on your return profile. I think management teams have become much more disciplined about the M&A approach, which I think institutional investors have been welcoming a lot, which actually squares the equation which you've thrown up, Ekrem, in terms of, what do I do with the money, dividend or investment. I think there are fewer good opportunities out there. So as an operator, I can only encourage, don't tell your competition right away about it, because it might become a crowded opportunity, because at the end you want to be first there and play to the strength of the advantages with Karim has pointed out on the synergy side. You might be in a position to bid a higher price because of your revenue and cost synergies because of the structure of your group. And we all know where the advantages and disadvantages of the various telco groups lie. And often it's driven by footprint, it's driven by brand equity, which can differentiate yourself in the marketplace. You might want to partner up with private equity. It's also not a bad thought, I personally believe. It's a good opportunity to do it in tandem, as long as your strategic goals are aligned. And there's one final point I want to make is strive for management control, because to realize the synergies, which you pointed out, Karim, I think you need to be in the driving seat. There is sometimes that option not available in the first stage, but clearly have a path laid out to take management control of that investment you're about to make. Don't ignore the fact. I think the financial markets, from a public market side, clearly appreciate at least the path to control, if not control from the beginning, which often costs you a bit of a premium, but I think the market clearly reflects on that in a positive way. These would be the key thoughts I would take away.
Thank you very much. Eventually, one comment before closing the session. I'm coming back to your comment before, still focusing on the synergy. One of the biggest value creation to me, although it's difficult, you mentioned it with Victoria Colau trying to implement this synergy drive within the established structure. In an established structure, it's very difficult to change that. I fully agree with you. However, I see that today there are opportunities where operators are reshuffling their portfolio, withdrawing from certain markets. We saw Vodafone withdrawing from many markets already, France, Switzerland, Poland. We saw Orange withdrawing from multiple markets, Holland, now 3 others are coming. So that is a unique opportunity for the strategic buyer to test the concept I was talking about, where we say, we buy it, but don't expect with a new management to operate as a standard operation. You have the brand, you have the established distribution. Now let's see where the network will lie. Let's see what kind of synergies, or extended business model for one larger country. That is, if you're operating in Germany, eventually in Austria, you would not have a full-fledged operation. It will be just considered as another expansion, or France and Belgium, etc., etc. So I would, and I tested this idea with some of the CEOs who are ready eventually to take this challenge. That would be, we name it Telco 2.0, whatever. It's definitely a different business model in operating an operator in the future. We'll see. So I'd like to thank you very much again. Please thank the panelists for the discussion.